Good. All right, we'll call the work session to order a couple minutes early because it's exciting stuff and we're going to have lots of questions. So I have one agenda item, the audit review presentation for FY 2022. You're up. Thanks for dressing up.
Problem.
Chuck.
Get this in the right spot, maybe. All right, so if you want to bump ahead to the next slide or.
And Mayor, if I might, so Harold, I don't know if this is Harold Ray with Upton Larson Associates, our external auditor. Is that you, Cynthia? I think so.
All right. Yeah, so a quick introduction. I'm Harold Ray with CLA. I'm a signing director there. Work primarily in the local government and nonprofit space. 2022 is the 9th year that we've worked with the city on the financial statement audit. Just reminder, it's 10/31/22 financial statements on a modified cash basis. So tonight we'll go over some required communications, internal control communications, and then a high-level financial overview. So as far as required communications, there is a separate letter that you've been provided. And it goes through a lot of boilerplate information on different things that we're required to communicate. If there's any significant accounting policy changes, it goes over estimates, any significant or unusual transactions. Didn't have any significant or unusual transactions. The only estimate that really impacts the financial statements is depreciation expense. As far as any audit difficulties or disagreements, we didn't have any. So feel free to read through the rest of that letter to go over the other required communications, but I'll kind of leave it at that. As far as internal control communication, so we do look at the design of your internal control structure in regards to significant account balances or transaction classes as we go through the audit. We have a few different classifications that those might fall under if we come across any deficiencies, such as a material weakness, which you can see the definition here, significant deficiency. And then we also have to look at certain compliance or other matters that might impact the financials as well. So the first item there, 2022-001 financial reporting. If you read through that finding, it states essentially we're the outside auditors, but we're preparing the financial statements for you, and we can be considered part of your internal control. It's a finding that you'll see commonly in organizations of your size. Most clients we do prepare the financial statements for. It's just kind of a cost benefit analysis of having us prepare those financial statements, or you actually hiring another third party to help them prepare those and put together all the disclosures. The second item, identification of audit adjusting entries. So with this finding, any significant audit adjustments, they're reported there. So for this year, typically we'll have some adjustments that deal with recording of property and equipment, putting things on the depreciation schedule, things of that nature. But the only thing that we identified as a significant audit adjusting entry had to do with the issuance of the debt for the TIF revenue bond obligations. With that adjusting entry, we added an additional $8 million in debt to the balance sheet. There's about 12 different cash accounts that are also associated with that debt issuance. So those are added to the records as well. This was the first time that the city's had a debt issuance like that. So this was something that was maybe a little, not necessarily the norm you would see every single year. Just going over some of the totals again, $8 million in debt, about $528,000 in additional revenues, 6.2 million in expenditures, and additional assets of 2.3 million for the cash accounts that are associated with that. The last item is somewhat of a result of item number 2. So with adding those additional expenditures on the books, it caused a special allocation fund to have expenditures in excess of the original budget. Any questions over those items?
I'm sorry. Oh, it is mine. Sorry, Linda. I just might comment that, as Harold said, the issuance of debt was new to us, as was then accounting for those expenditures. You'll see in his presentation later, there are some numbers that are significantly higher than normal years, particularly on expenditure side and then on debt. When we did the debt issuance for Marketplace, we had discussed that there would be an impact on the audit. So that's where you're seeing. This is the result of that.
Yeah, and typically when you're issuing debt, you'll have the debt proceeds coming in, you have the liability, but a lot of times you're investing that into some sort of capital asset, whether it's infrastructure or a building or something like that. With these TIF revenue debt obligations, a little bit of a different animal. The cash is coming in and it's going back out for the developer expenses. So a little bit different treatment. Single audit results. So because you had federal expenditures in excess of $750,000, required an additional single audit over the federal funds. So total federal expenditures for 2022 were just over $2.1 million, had to do with ARPA funding, both not only what you received locally, but also what was passed through Clay County as well. Going through that testing, there's a lot of different compliance aspects to it, looking at internal control over compliance as well. The one finding that we did note had to do with documentation of suspension and debarment for contractors. So during the bidding process, there needs to be a documentation procedure to make sure that any contractor that you're bringing in on a federal program isn't suspended or debarred by the federal government from receiving federal dollars and kind of acting on that contract. So it's just a matter of going out and there's a website to check, making sure that that contractor isn't debarred or suspended. The contractor used, there wasn't any issues. It's just a matter of documenting that check as you go through the bidding process. And after that, we'll hit some financial results. So this is revenues and expenditures, all governmental funds. So this is basically the entire city except for water, wastewater, and sanitation funds. So for 2022, you see that the expenditures were pretty well in excess of revenues. Again, this is going back to those developer obligations. $7.2 million in expenditures was in the special allocation fund for this year. So that's driving the biggest change there. Overall, it's a net deficiency of about $6.1 million. So all governmental funds, revenue sources, just a high level, where does your revenue come from? Again, this is excluding the water, wastewater, sanitation activities. Obviously, most of it's coming in through taxes of various types, about $7 million for this year, about a $1.2 million increase over the prior year. The other categories there, licenses, fees, and permits, intergovernmental revenues, or like revenues that may come from other governmental sources, grants, primarily those sorts of things. Charges for services, fines, interest, and miscellaneous. So obviously, nothing that you don't know, most of your money is coming in through taxes. So to drill down on that, just one little bit level further into the tax revenues made up of property taxes, sales and use taxes, and franchise taxes. Property taxes for this last year were just over $1.2 million. Your sales and use taxes were up to about $5.1 million. And that was an increase of about $975,000 over the prior year. And a big chunk of that has to do with the CID fund and revenues coming over from that. And then franchise fees, relatively flat year over year. Kind of a historic trend, they've been pretty flat. That was about $742,000. So this is where things start to look a little wonky because of those expenditures with the obligations this year. So it just kind of gives you an idea of how much those do impact your financial statements. that economic and community development category is quite a bit larger than everything else has been in the past. So we'll focus in on the general fund a little bit to give a little more clarity, which is excludes those developer obligations. So this is expenditures within the general fund and the major categories there. So general government, police, municipal court, which you no longer have, public works, parks and rec, economic and community development, capital outlay. So you can kind of see over time from 2016 to 2022, the last 7 years, how things have changed. Within the general government category, the enterprise leasing also flows through that category. So with that leasing activity, there's about $143,000 increase over the prior year. Within police, there's $173,000 increase in salary and related expenses to payroll. There's also a assessment with the police facility last year as well. Then in public works, there was additional expenses with some GIS, Wood Street maintenance, and master planning during 2022. So looking at the general fund in total, out of the last 7 years, expenditures have been in excess of revenues in each of those years. It was just 2019 where revenues actually exceeded expenditures. And just to give you an idea of that impact, if we look here at this month's expenditures and fund balance, you can think of this as what's your reserve level. That dark blue line is the general fund. So going back in time to 2016, it was just shy of 13 months. For 2022, it's just over 7 months. While it's gone down quite a bit, 7 months is a still pretty healthy reserve. I mean, generally you'd say you want no less than 3 to 6 months. You're still above 6, so still in a good spot. Then to give you a little perspective on the water and wastewater information, both operating revenues and operating expenses were up about 9.8% over the prior year. That led to a net operating income of just shy of $2 million for 2022. But both increasing as well as operating income is increasing as well. Then as far as city debt, starting in 2018 is when you first issued some general obligation debt in addition to the water and wastewater debt that has been on the books over the last 7 years. And then in 2022, you can see the addition of the TIF revenue bonds. So those TIF revenue bonds are about $8 million there in the orange. The enterprise funds debt is about 7.7 million. The general obligation bonds is about 5.5, so total of 21. Then, as far as the city's cash position, I would typically break it down in a couple different components. Because you usually have a lot of cash that's restricted for certain purposes, whether that's different taxes, whether it's for debt, whether it's for other things. The total cash position was about $16 million. So that increased about 2.3 million over the previous year. Most of that had to do, again, with the TIF revenue bonds. There's about $2.3 million worth of cash sitting there on the books related to that at the end of October. Those were the main highlights that I had. Happy to entertain any questions.
Any questions from the board?
Thank you. I have a question here. It had to do with trying to find it here, but there was two items that were found in the previous audit. And the question is, as far as addressing those, based on your last audit versus this audit, and going forward, have they been addressed?
So one of those items is going to be that financial statement preparation. So it's where we're kind of assisting the city with the preparation of the financial statements. That's still there this year. I don't foresee that going away necessarily either. Unless the city would like to go contract out that service to a third party and probably gonna incur some additional time and expense related to that.
Okay,
As far as the other item, had to do with audit adjusting entries. We did have a material adjustment for this year, but it was something different, something new. So, as far as the same types of items year over year, they were different. So there's improvement there as well.
okay, thank you.
And we do have our budget retreat next month, so if anybody wants to explore looking at having somebody else prepare financial statements, we can, but like you said, there's a significant cost to that, and most municipalities don't do that of our size.
Yeah, I would say if you go out and look at other financials for cities your size, you're probably gonna see the same.
Any other questions? All right, thank you.
Thank you.
Extra time, bonus time. Well, we will entertain a motion to adjourn this session. Thank you, Alderman Hartman.
Motion, yeah,
Second.
yeah, second, yep.
All right, all in favor of adjourning, say aye.
Aye.
All opposed, say no. See y'all at 7. Stand adjourned.
Yes, yes.